right, Matt, do you have a specific entry and exit for every trade you make?
A lot of people, that's a good question, and a lot of people talk about they want to buy at 1, sell at 2, sell at 3, buy at 2. It's really, the way I look at markets is not as direct as that. I mean, you can try to pick exact entries and exact exits. I tend to do that in chunks. So if I have a 2 to 3% risk of my trading capital that I'm willing to trade, I might step into the position in 1 to 5 legs. So if I'm going to sell 10, I might start with 2, add another 2, add 4, and then maybe add another 2 as it begins to go my direction. So what does that mean? It basically means that you're spreading your risk over an area instead of saying, I want to sell the highest point or I want to buy the lowest point. Often you're not going to be able to pick up either of the spots as you'd like, at least fully. So I think it's kind of a fool's game to try to say, and then on the other hand, if you're looking at an area like that and you want to buy low, but you'll buy at the top here a little bit just to get in case it never touches the bottom. That's really the way that you have to look at it, and then within that you're going to know really what your average is, and then from there that should not really take on any more of your risk capital than, say, depending on the individual and the size of the account, it's probably somewhere in the 1 to 5%. So if I'm going to sell 10 contracts at the S&P and my risk is $2,500, that means by the time I have a full position on, I'm going to have 10 contracts. Each contract is worth $50 per point. And if I sold 5 at $24.20 and I sold 5 on when it goes higher at $24.40, my average is going to be $24.30, and I'm going to have 10 contracts. And with that, at $24.40, my risk is already beyond let's say my risk was $2,500, so I couldn't do it in that situation. I'd have to wait possibly for a higher price, so maybe sell at $24.30 and then $24.40, and then the risk goes on the trade 10 points higher at, say, $24.45. So it really depends on where you want to get in, where the risk is, and how you want to leg into the trade. Often I'm more often not getting a full position on, meaning if my size is 10 lots, I may only get 6, I may only get 4, sometimes I get 12, sometimes it's a little bit more. I feel strongly about it. Something changes in the market, looks like it's going to go further and further. So that's the way I look at it, and it's a really good question, and I would kind of use some game theory and use setups that allow you to spend some time kind of back testing where you're going to be wrong. Because once you do that, then once you put on the trade, you've kind of let it go, and you know that if it goes against you 10 points, if that's your number, you're out. And on the profit side, as long as you take care of the risk, you can start pulling profits off in increments as the trade is going our direction also. So leg in, leg out, it's more of a accordion. It's the inhale, exhale of trading that is really natural. Most of the time markets aren't going straight up or straight down, so to get the bigger pieces of that, you try to get on the trend and you try to inhale, exhale often, many times before it actually breaks out of a trading range.